We've already had a week of digesting the Donald Trump effect. Markets still remain volatile. Also, we've seen a sharp drop in semiconductor stocks and NVIDIA. Big issues there. Bit of competition there from China. Also, consumer sentiment declined to 71.7 from 74 in December. But first, let's have a look at what's happening in the US, the Trump effect. Comes out, says a whole lot of interesting things about tariffs. The market's yet to react, or the countries are yet to react. But I think it's really interesting that it is protectionism and a whole new era of protectionism in global trade. It's a hard line that Trump's putting down, and if you really think through it, there's 25% on immediate tariffs for Canada, Mexico, and in China, we've already seen 100%, particularly on the electronic car market. So this form of protectionism, I think, is here. The question is how Trump will use this to leverage what he wants. Because we've already seen the likes of Cuba, who does significant trade with the US, come back, basically fold and basically help and say, well, look, we'll do the best we can. So in terms of that, it is quite a drastic move. Now, the market will either, if it's feeling comfortable, it'll absorb, or it'll just divert from some of those cars into other cars, other made cars, or locally sourced cars. But with anything there, it's either going to do one of two things. It becomes highly inflationary, or it depresses the demand. And I think that's where we like that consumer confidence. Further, when you look at as we said, the automotive industry, you've also got to look at some of the other agricultural exports. Now, because that also is a source of inflation. So what you might find is retaliation from particularly Mexico and Canada on the tariffs in the way of how they relay pricing or export prices to the US food prices, foodstuffs. And that to me is an interesting thing, because we haven't really seen that retaliation from either of the countries. And the US is quite reliant on agricultural inputs from Mexico and agricultural inputs from Canada. Now, once again, if you are opposing an export tax on that, or a tariff, whichever way you want to look at it, then that also proposes an inflationary aspect to the market. So we really see that once again is going to cause the Fed to start to make decisions about what it does with interest rates. And to me, that's going to be one of the most important things as we lead into the period of time that Trump comes in here. Remember, Trump does come into the market with a lot of gusto, and it tends to be watered down. But whatever it is, I feel that he's very hard line about making American manufacturing great again. And to do that, he has to push out some of those other producers, and it's a global issue and a new era of protectionism, which we know from experience does become quite inflationary. So now it's a balance between these new prices that we expect and a balance towards also sentiment. If sentiment remains good and people are making money, then it's not going to be too much hard, because that'll filter through the economy. But if sentiment starts to drop off and people say, well, look, I'm not paying these prices, then that is a worry, because all of a sudden consumers' sort of spending reduces. So I think that it really is important to focus on. As we do know, the consumer confidence, particularly the University of Michigan Confidence Sentiment Index, which we focus on, it has declined to 71.1 from December 74 mark. And that's the first major decrease in 6 months, and certainly fell short of all our expectations. So when you look at it, you can see that if confidence starts to come off, which it is, then comes to those levels around 60, that's when we start to get those areas. Now around 2022, 23, the index did drop below 60, but we know the reasons for that. But if we start to get below that and we have no major reasons rather than economic, then that is a bit of an issue. So let's just see what happens. Also, as I mentioned, 1-year inflation expectations rose to 3.3 from December's 2.8. Now that's quite a punchy number. So once again, let's see how the market digests it. The Fed's certainly going to have a look at that and say, well, I'm not going to move on interest rates too quickly. And that to me is one of the major issues. Interest rates higher for longer. And remember, we've already talked about valuations in stocks, and we still expect them to be too high to reflect the current market conditions. As a result of that, we've seen a bit of a sell-off. When you look at NVIDIA and you look at this sell-off, which has happened just last night, you can see there is competition, and that competition now has questioned the reliability of the valuations that we're seeing in the tech sector. And that, to me, is something that might actually signal pretty much a major top in play. And I think when you look at it, you can see some double head and shoulders emerging. And I think if we do see a break there, more on the technicals, then I think you'll see a bit of a sell-off. Okay, this week there's quite a long. We've still got more Trump's announcements. The Fed's expected to maintain its funds rate in its meeting. But we're also anticipated to see ECB and Bank of Canada lower rates, and that because it's a weaker economy, both are weaker economies. We've also got GDP growth forecasts for the US, Euro and Germany, France and Spain, and that's going to be quite important.